Inflation drops for the 17th consecutive time. Monetary Policy Committee meeting underway in Abuja. Experts suggest retention of present rates. Body of Nigerian professionals review the nation's economy. I am Muplang Dakok, and this is your regular business program, Business Express. Please stay tuned. As the Monetary Policy Committee MPC of the Central Bank of Nigeria begins its third meeting of the year today, analysts say the committee is likely to retain the monetary policy rate MPR at 14% for the 10th consecutive time. At its last meeting in May this year, the MPC maintained the MPR at 14% with the asymmetric coordinator at plus 200 and minus 500 basis points around the MPR. It retained the cash reserve ratio, CRR, and liquidity ratio, LR, at 22.50% and 30%. The MPC has retained the MPR at 14% since July 2016, when it hiked the rate for the third consecutive row in a year. Meanwhile, headline inflation falls for the 17th consecutive time to 11.23% year-on-year at the end of June 2018, compared to 11.61% in May of the same year. Data released by the National Bureau of Statistics this Monday morning shows that food inflation dropped to 12.98% from 13.45%. The data also shows, however, that month-on-month inflation rose 1.24% in June from 1.09% in May. The urban inflation rate eased by 11.68% year-on-year in June 2018 from 12.08% recorded in May, while rural inflation rates also eased 10.83% in June 2018 from 11.20% in May 2018. The inflation rate fell even as the Nigerian government started releasing funding for its record 2018 budget of 9.12 trillion naira. The further drop in inflation, as released by the National Bureau of Statistics, has enthused many Nigerians as they see the development as positive for the economy. Olayinka Ojo felt the pulse of the public shortly after the report.
First of all, it's good news, which means the value of money is naira is gradually coming back to shape, and in the commodity, in the basket of commodity, it's also a good news for the entire nation. What I want government to pay attention to, which I've started seeing attention in those regards since last month, is agriculture. Why? Because larger proportion of our population don't live in the cities, they live in rural area, and they interface with agri produce from time to time.
It is not the dropping of inflation by figure that matters. It should affect the individuals in the economy, in the society.
Inflation dropping for the 17th time means for now we will enjoy.
I'm now being joined by Mr. Yushau Aliu, an economic and financial expert, to discuss the latest fall in inflation. You're welcome to the program.
Thank you very much.
Also joining us via Skype live from London is Mr. Lukman Otunuga, a research analyst with FXTM. Hello, Mr. Lukman.
Thank you very much for having me here. Good afternoon.
Okay. Please, can you give us your thoughts on the inflation figures and what it means for the Nigerian economy? Mr. Lukman.
Yes. So the fact that inflation in Nigeria has weakened to its 29-month low is actually a welcome development for the Central Bank of Nigeria and Nigerian economy as a whole. Continuous signs of easing inflationary pressures in Nigeria do provide a solid argument for the CBN to move forward with cutting interest rates in an effort to stimulate borrowing, spending, ultimately supporting economic growth even further. However, although inflation in Nigeria continues to ease, there's a strong suspicion that the Central Bank of Nigeria is likely to maintain status quo during tomorrow's MPC monetary policy decision.
Okay. Back home, Mr. Yushau, what would you say is responsible for the continuous fall in inflation figures?
There are many factors. Inflation, as it is, has a lot of components, and the component of inflation, you have to study the economy in which you are trying. But the consumer price index, normally, when it is measured, you find realistic figures from there. So main issues, as far as inflation is concerned, it depends on either going up or coming down. Now that it's coming down, there are a lot of issues, including government policy. That is the central bank in particular, because the target of the central bank is to have a single-digit inflation in an economy. So if the central bank is conscious of trying to bring down the inflation to single digit, which is going to be friendly to a consumer within the same economy. So there is also need to look at other factors associated. That is an agro-based economy that is producing large varieties of goods and taking them into the market is also assisting. However, even the price can be adjusted downward as a result of stability in the economy. If you check carefully, most of the factors responsible for high inflation rate, that is, if you look at insecurity, for instance, the stability in having security also is helping the market to operate and the supply of goods from the rural communities to the urban areas.
Okay. All right, Mr. Lukman, do you think the Central Bank of Nigeria will move forward with the cutting interest rates?
This is a very interesting question. So the fact that inflationary pressures in Nigeria are slowly becoming a past theme, and inflation is moving closer to the Central Bank of Nigeria's 6 to 9% target, it does provide an argument for the CBN to move forward with cutting interest rates. However, there's a combination of domestic and external factors that are likely to keep the CBN on standby. Firstly, externally, if you look at the global economy, number one, we have global trade tensions, which continues to weigh on global risk sentiment. Number two, the dollar continues to appreciate. And number three, market expectations remain elevated over the Federal Reserve, raising US interest rates twice this year. So if the Central Bank of Nigeria moves forward with cutting interest rates and the Federal Reserve raises interest rates, the divergence in monetary policy between the CBN and the Fed is likely to create price instability and spark capital outflows, which could be bad news for Nigeria. Alternatively, though, if we move closer near the end of the year, if the Nigeria economy continues to display stability, the CBN may be willing to overlook the potential capital outflows by cutting interest rates in Q4 in an effort to stimulate growth. But to answer your question, tomorrow the CBN is likely to remain status quo and leave monetary policy unchanged.
Let's come back to Mr. Yushau. What do you see playing out at the MPC meeting?
What we are expecting is we are expecting them to at least look into the rates as it is, looking at there is no changes. We are going for stability in the economy. So what we are expecting the CBN to look at the exchange rate critically, because the exchange rate, we are now moving into electioneering. That is where a lot of foreign currencies within the economy will be converted into domestic currency. So, and also looking at the fact that the central bank has started marketing yuan product in the market, the MPC support also to critically look at the pros and cons of application of those trade agreements.
Okay. Let's go back to Mr. Lukman. Mr. Lukman, you're still with us. Can you give us the economic outlook for the country for the rest of the year?
focusing on the Nigerian economy, the economy continues to look encouraging despite the softer GDP figures that we experienced in the first quarter. Nigeria continues its ongoing quest to diversify and break away from oil reliance. There's a foreign exchange stability. Overall, the economy is looking in the right direction. However, though, short term, it must be kept in mind that Nigeria still remains exposed to oil shocks. If oil prices start to depreciate, or if we have a situation where a global trade war becomes a reality, this poses downside risks to emerging markets, including Nigeria. So that's what we could be looking at right now. If Nigeria continues its current momentum, the outlook for 2018 does look encouraging.
Okay. Still with you, Mr. Lukman. Does the continuous fall in inflation reflect to ordinary Nigerians? Do you see it reflecting in their daily lives?
This is a very interesting question. Naturally, I'll need to live in Nigeria to answer this, but looking at things economically, though, a fall in inflation does mean that people have a stronger purchasing power. So if inflation continues to drop, the amount of naira, the strength of the naira domestically increases. So people are likely to be able to have a stronger purchasing power and purchase more, and such could support economic growth.
Mr. Yushel, can you give us your thoughts about the impact of the continuous fall in inflation figures?
The fall, you have to look at the components that were surveyed. Over 740 products were surveyed and carefully studied by the Bureau of Statistics, which has to be commended. But out of the two, if you look month-on-month basis of inflation, that is from 11.23. Yeah. If you look the difference between May and June, it's just about 0.38. Yes. So 0.38 is not significant to change the consumer habit looking at his income. I bet it can change the figure when the aggregate function is summarized. And in addition also, what we are looking is that yes, there is a drop in inflation, but we want more participation by the citizen into the economy. And the only way that can be achieved is when income goes into their hand in good time. And if this 0.38 difference recorded between May and June is to be sustained, probably between now and December, we are expecting to be approaching a single-digit inflation, which probably at that same period, that is when the citizen will begin to have an impact from the activities of the market in relation to the inflationary trend.
Okay. You talked about participation of the citizens. So what other areas do you think government needs to focus on in order to retain or continuously bring down the inflation rate?
The central bank has a great job to do. The job is also is through money supply. You know, when money is contracted, it's like a balloon. When you deflate a balloon, it goes down. When you blow it, it goes up. So inflation is always waiting for the responsible agencies to tackle it. So the central bank has a greater role in exchange rate. I have to emphasize that one, controlling it. Also, the Federal Ministry of Finance, they have to be proactive in the sharing of revenue as at when due. Because when inflation is coming down, it has to go with the percentage of the money supply attributed by all government agencies in the economy, as well as private companies and private organizations.
Okay. Can you give us your closing thoughts about the latest inflation
It's encouraging, but we have to commend the Bureau of Statistics for remaining consistent in bringing these details to Nigerians. However, the central bank through the MPC, we have hope that with the composition, with the new hands in the committee, they are going to do well, probably between now and December. Thank you very much.
All right.
Yes.
We thank you for joining us, but can you give us your closing thoughts?
On the Nigerian economy and inflation in general?
Yes.
So, as we've discussed discussed earlier, it's very encouraging that inflationary pressures in Nigeria continue to ease, as this is likely to not only increase the purchasing power of Nigeria, provide a solid argument for the Central Bank of Nigeria to eventually move forward to cutting interest rates as a method of stimulating growth. However, although inflationary pressures are easing, other factors need to be put into consideration. Firstly, global trade developments present a significant threat to global economy and emerging markets such as Nigeria. Secondly, the appreciating dollar could enforce downside risks on the naira. And thirdly, of course, the most important is the Federal Reserve, which is expected to raise US interest rates 2 more times this year. Higher interest rates are likely to spark further capital outflows from emerging markets, including Nigeria. So this could be the biggest headwind for the CBN to move forward with cutting interest rates in 2018. However, though, we've got the GDP from Nigeria coming up in a couple of weeks. If GDP in Nigeria continues to beat expectations, oil prices result in higher government revenues, the Central Bank of Nigeria should have enough buffer to move forward to cutting interest rates at least once to 12% before the end of 2018.
All right. Thank you very much. I think that's where we will stop the discussions. Mr. Lukman Otunuga from London, thank you for joining us.
It's a pleasure.
All right. And Mr. Yushau Aliu.
I'm grateful. Thank you very much.
With us in the studio.
Yeah,
thank you very much for coming.
Thank you.
It is an established fact that professionals are the catalyst for the development of any country. That is not lost on the Nigerian professionals as they quarterly meet to analyze the performance of the nation and how they can make it better. Let's join Justin Bem Unyu, who is at the 3rd quarter meeting of the body of professionals. Hello, what's happening?
Very much, Muplang. We are here at the Nigeria Society of Engineers headquarters, where the Association of Professional Bodies of Nigeria is holding its board meeting to discuss general professional involvement in the country and contribution to national development. And here with me is the president of the Association of Professional Bodies of Nigeria, Dr. Omede Idris.
Good morning. Thank you very much.
Yes.
Right.
Please, what particular issues you bring into the table as it affects national development and, of course, economic development of this country?
Well, first and foremost, professionals are involved in every aspect that has to do with national development, both from the point of infrastructure, point of service delivery, and point of research. So in excess, because the way Association of Professional Bodies is structured, all the key professionals are members of this body. So from their own background, they bring onto the table what they've been doing in their own particular area, in particular professions, towards the growth and development of this country. In areas of economy, in the areas of health and health, in the areas of infrastructural development. All these are areas that we tackle as a body. It's a collection of the key professionals who are registered by Act of Parliament or have regulatory function responsibilities. So they are actually the ingredients, the elements that are key for national development. Because for anything about development I think about, professions are key towards initiating and delivering on those things in terms of planning and execution. So here we're just asked quarterly to review this. In addition to that, we're having the seventh summit, which is coming up tomorrow, that has private sector involvement, participation for the growth and development of our nation.
Thank you very much, Dr. Idris. Thank you for your time. Well, studio, we will keep you posted as events unfold here. Over to you, studio.
All right. Thank you very much, Bem. Now moving on, experts have noted that Nigeria's capital market is small compared to the nation's economy, and one of the challenges facing Nigeria's economic growth as it currently contributes less than 20% of the country's gross domestic product, GDP. The second Capital Market Forum, hosted by the Senate and House of Representatives Committee on Capital Markets and other institutions and regulatory agencies, seeks to address these and other challenges working against Nigeria's economic growth and post-depression of stage Vice President Yemi Osinbajo represented, described the theme of the forum, Capital Market, as a catalyst for growth and development.
There's indeed extensive literature on the fact that there's a strong positive correlation between the level of development of the financial system and economic development, for the simple reason that financial markets act as intermediaries between lenders and borrowers.
Funds, long-term funds, flow into the capital market, then new businesses will be created, existing businesses will be strengthened, and employment will be generated.
The forum will create an avenue for participants to brainstorm on the role of the commodity exchange, development of the agricultural sector, and the capital market options for funding projects. Similarly, it has been a market of the bears on the Nigerian stock market. Let's join Bosede Abel for highlights of how the market fared last week.
The Nigerian Stock Exchange, NSE, continued its downtrend as the NSE All-Share Index and market capitalization depreciated by 2.11% to close last week at 36,603.44 and 13.2 trillion naira. A total turnover of 1.6 billion shares worth 14.8 billion in 18,795 deals were traded in the week by investors on the floor of the exchange. All other indices finished lower with the exception of the NSE Insurance Index that appreciated by 0.08%. The financial services industry led the activity chart with 1.056 billion shares valued at 10.2 billion traded in 10,056 deals. The services industry followed with 264.2 million shares worth 549.6 million in 592 deals. The third place was occupied by conglomerates industry with a turnover of 134.3 million shares worth 199.5 million naira in 1,286 deals. Trading in the top three equities, Sterling Bank PLC, Medview Airline PLC and Zenith International Bank PLC accounted for 719.3 million shares worth 4.20 billion naira. Also traded during the week were a total of 340 units of exchange-traded products, ETPs, valued at 33,616.20, executed in 6 deals. A total of 17,251 units of federal government bonds valued at 17.9 million were traded in 18 deals. 16 equities appreciated in price during the week, 59 equities depreciated in price, while 94 equities remained unchanged.
And still from Bosede Abel, let's have the numbers of stocks in other parts of Africa and the rest of the world.
Stocks in the African market maintained mixed trend in the week ended July 20th, 2018. South Africa JSE Africa Top 40 gained 1.40% and closed 50,904.20. Namibia 1.26%. Tunisia's Tunindex 0.67 to close 8,167.49. While Kenya Nairobi All-Share depreciated 0.44% and Ghana's GSE Composite Index also declined 0.06% and closed 2,862.98. In the US, stocks were little change on Friday as strong quarterly results from some of the largest US companies. The S&P 500 slipped 0.09% to 2,801.83, with real estate and utility lagging. Dow Jones Industrial Average fell 0.03% to 25,058.12, and Nasdaq Composite declined 0.07% to close at 7,820.20. European stocks market experienced negative trend as stocks lower on trade concerns. FTSE depreciated 0.07%, DAX 0.98% and CAC 40 0.35%, while for the Asian stocks, Nikkei dropped 0.29% as dollar extends losses. Hang Seng Index rose 0.76% and Shanghai appreciated 1.88% and closed 3,492.89.
And now a quick look at oil prices today, as well as other global commodity prices. And that's how we drop the anchor on this edition of Business Express. Do join us again Wednesday for another interesting package. I am Muplang Dakok.